Okay, hi everyone. Welcome back. Okay, so welcome back to the Exam Edit webinar. Today, we're doing it in conjunction with EFG. Okay, so for today, we'll be covering on Ichimoku Cloud. So just before I start, can you guys see my screen clearly? And can you hear me? If you can you please just put yes under the questions tab? So it's nearing the end of the year. We're almost going into 2021 now. Okay, so I hope this year has been going well for all of us. It's a pretty unusual year with COVID and all. Okay, so let's just wait for about 1 to 2 more minutes for more people to stream in before I start. And if you guys have any questions along the way, please just put it under the questions tab as well. Okay, so for today, we're covering on Ichimoku Cloud for those of you guys who just joined. Okay, so let's just begin. So for this webinar, right, I'll be covering on the Ichimoku Cloud indicator, as well as the calculation. So how do we interpret the signals? What does it mean to be bullish or bearish? Okay, so the signals for Ichimoku Cloud, how do we basically interpret the signals? Okay, so just before we hop into that, right, a little bit of background on Ichimoku Cloud. Okay, so for the first half of the session, okay, as much as possible, we'll try to keep it within this, so like the theory part of it, and then the second half of the session, I'll try to hop onto the charts so that we can try and apply what we've learned to real life examples. Okay, so what we see on the charts. So Ichimoku Cloud, right, a little bit of background. It was developed by Goichi Hosoda. So who's Goichi Hosoda? He's basically a Japanese journalist. And he was writing under the name Ichimoku Sanjin. Okay, so he developed this charting technique before World War II, and he offered it to the public when he published his book in 1969. So for Ichimoku Cloud, right, it's a pretty versatile indicator, right? So essentially what it does, right, for those of you guys who are not familiar with Ichimoku Cloud, so later we'll load them on TradingView, okay, just to see what it does. So this is basically an indicator that helps us to identify support and resistance areas. They are also what we call a trend following indicator, so they identify the trend direction. And it also reflects the momentum, right? And because of all of this, we can actually use it to provide us with trading signals. So for Ichimoku Cloud, it translates, right? When you look at the word Ichimoku, Ichimoku essentially means, it translates to as a glance, okay, or what we call one look. So which means that when you look at the chart, right, when you load your Ichimoku Cloud, with one look, you can look at it and tell the direction of the trend. Okay, so Kinko Hyo, right, translates to table of equilibrium or balance table. So when you put them together, right, when you have Ichimoku Cloud Kinko Hyo, it means that chartists can identify the trend, right, and also potential buy and sell opportunities within that trend, right, just with one look. Okay, so that's essentially what it means. So the idea is that it helps us to better identify, right? It makes our job easier to identify trends and also potential buy and sell signals. Okay, so under the Ichimoku Kinko Hyo, right, there are 3 key time periods that I use to calculate these 5 individual plots using these indicators. Okay, so how these 3 time periods are derived, right? They are based on the trading conditions at the time that the indicator was created. Okay, so that was in Japan in the 1930s. Okay, so with that 3 time period, right? Over here, okay, so at that time in Japan in 1930s, right? Trading week was 6 days instead of 5 days that we're using today. Okay, so back then they have 6 days, and many traders, right, wish to alter the time period to reflect the change in the trading days. Okay, so we might need to tweak it a little bit. So the default periods that we have, right, the first one is 9 days. Okay, so the default period that we have, the first one is 9 days, as you can see here. 9 periods. Okay, so 9 periods representing 1.5 weeks previously. Now it's changed to 7.5 period. Okay, so mainly because it's 1.5 weeks, and right now our working week, right, our trading days, it's only 5 days. And then 26 days, 26 period, right? So 26 period used to be 1 month. Now our 1 month trading period is 22. Okay, and then we have 52 period. So 52 periods represents 2 months, and now we can change it to 44. Okay, so because 1 month is 22 days, 22 working days. Okay, so these are some of the settings that we can play around with, and it comes from the understanding that previously when this indicator was created, it was used, right? The default period was used to measure because there was 6 trading days instead of 5 today. Okay, now let's look at the Ichimoku Kinko Hyo plots. Okay, so the Ichimoku Kinko Hyo, it consists of 5 different plots. Okay, so we have the Tenkan-sen, right? So Tenkan-sen uses a default period of 9. Okay, so to calculate your Tenkan-sen, essentially what we do is that we'll add the highest high and the lowest low, right? So we identify the highest high and lowest low of the last 9 periods, and we will take an average of this. Okay, and then the highest high, right, and lowest lows of the certain values that we have, it spans across the specified number of time periods. Okay, so that is for Tenkan-sen. And then the second plot that we have, it's called Kijun-sen. Okay, so for Kijun-sen, it uses a default period of 26. Same thing, right? To calculate it, you just need to add the highest high across the 26 period, right? So depending on the chart that you're looking at, if you're looking at, for example, a daily chart, it'll be across 26 days. If you're looking at an hourly chart, then it's across 26 hours. Okay, so to calculate this, right, we just look across the highest high and lowest low for the specified number of periods. So 26, then will be 26 periods. And then same thing, we'll take the average of them, and then we'll divide them by 2. Okay, so that's how we can calculate the Ichimoku plot. Not to worry, these indicators are all, it's on TradingView, it's available on MT4, MT5, right, on XM, MT4, and MT5. So we can just load them. Okay, so more importantly, we need to understand not the calculations, but rather the periods that they're using and why we are using them, and also how we interpret them. Okay, that's more important. Okay, so for the other, we have 5 components of it. So we actually went through 2 of them, right? So the third and fourth Ichimoku plots, right? It's called the Kumo, right? Or in Japanese, Kumo means cloud. Okay, so, or what we know as the cloud. So the first plot that we have, okay, so we have the Senko span A. Okay, so Senko span A uses a 52 period and is calculated by adding the Tenkan-sen and Kijun-sen, and then taking an average of these. Okay, so that's for span A. For Senko span B, right, it uses 52 periods. Okay, so how we calculate this, it's by taking the highest high and lowest low of the last 52 periods. And then we'll divide them by 2. So these lines are referred to as leading because they are plotted 26 periods in the future, and their difference forms the Kumo. Okay, so for Senko span A, it forms the faster. So for A, right, so A forms the faster cloud boundary, whereas for B, it forms the slower cloud boundary. Okay, so those are the third and fourth plot. And then the last plot that we have is the fifth plot. So this is Chikou span, right? So the fifth plot is Chikou span, and it's used that has a default period of 26. So this is simply the current close, right? Plotted 26 periods in the past. Okay, so this is for Chico span. Okay, now let's take a look at the plots on the chart, right? So let's say, right, you have this chart that we're looking at, and you have your Tenkan Sen, right? So Tenkan Sen is closest to the price. Okay, so this is the one that's closest to the price. And then we have Kijun Sen. Okay, so Kijun Sen is slightly further away. And then afterwards, we also have our Senko span A and B, right? Together, when we draw this, right? So the Senko span A and B, it forms what we call the Kumo, and is plotted 26 periods ahead of the last close. Okay, so those are the plots. And then for the fifth plot that we have, right, is the Chico span, and this is plotted 26 periods. Okay, so the A and B will form your cloud. And then the fifth plot is your Chico span, so this is plotted 26 periods behind the last close. So it's going to look like this. So if you load the full indicator on Ichimoku Cloud, you can see that it's going to look something like this. Okay, with the different spans, A and B form your cloud. Okay, so personally on Ichimoku Cloud, the one I use more often would be the Senko span A and B, as well as the Kumo. Okay, so I use it when I'm identifying, let's say, key levels. I use it as a supporting argument, right, for the case. So for example, let's say on euro dollar, you're bullish, right? So when you load your key levels, you identify key levels on the larger time frame, right? When you do a top-down analysis, so you go from a higher time frame approach down to a smaller time frame approach. So let's say on the daily, maybe sitting on the key support, right? And it's holding above the trend line. So if you go into the smaller time frame, you know that your direction is bullish. And on a 1 hour, you see a nice support level that is testing or even approaching, right? So in this case, you want to make a call for a bullish call, right? I would use Ichimoku Cloud as well as in supporting argument. Okay, so that's one way you can use it. I know there are people who trade just purely on Ichimoku Cloud as well. Okay, but I don't trade purely on Ichimoku Cloud. Okay, but there are, and if you guys trade on Ichimoku Cloud, right, you can share as well. Like, are there any things that you look out for when you're trading on Ichimoku Cloud? And maybe, like, let's say you only want to go long after it breaks above the cloud. Okay, so things like that. So rules, basically. Okay, so let's look at the cloud itself. So the cloud, right, you know that the area, right, is formed by the two spans. So our spans A and B, right? So span A and B will form your cloud. And there are two ways to identify the trend using the cloud. Okay, so when we look at the cloud itself, let's look at how we can interpret them. Okay, so Senko span A and B, right? You can see, for example, this is A and B, and it forms your cloud. Okay, so the area between the two spans, it forms the Kumo. Okay, so how do we use this to identify whether it's in an uptrend or in a downtrend, right? So the first way we can do it, right? So when you say that something's in a downtrend, it means that prices are forming lower highs and lower lows. Okay, so which means that generally the buying pressure is weak, right? You have sellers that are constantly pushing the prices down. So in this case, right, a trend is when prices are below the cloud. Okay, so for example, like this. Okay, so apart from just Ichimoku Cloud, right, the basics as well that we cover, you can see that prices are pushing to form lower highs and lower lows. Okay, so when the prices are inside the cloud, right, when you see something like this, so this is a downtrend, okay, because prices are holding below the cloud. Now the second one that we have, right, is when prices are inside the cloud. So something like that. Okay, so what does it mean when prices are inside the cloud? Can you guys make a guess? When you see that prices are inside the cloud, what do you do, or how will you interpret it? Below the cloud, it's obvious, right? So below the cloud is downtrend, above the cloud is uptrend, and it's inside the cloud, it's neutral. Okay, so when prices are inside the cloud, right, the trend is said to be neutral. Yes, okay, so yes, don't trade when inside the cloud. By yen, yep, you got it right. Okay, yeah, so we don't trade when it's inside the cloud. Okay, so prices are considered to be neutral, right, when it's inside the cloud. So you tend to just stay away from it, okay, until the trend is clear. And then, right, when the prices are above the cloud, okay, let's say it to be in an uptrend. Okay, so yeah, so that's how we can interpret this, right, in terms of using the cloud as well as how prices reflect it. So basically in an uptrend, downtrend, or if you're neutral. Okay, so this is in an uptrend. Okay, so that's one way we can interpret the cloud, right, and the Kumo. The second interpretation of Kumo, right, is based on the color of the Kumo. So the first one is about prices holding above, below, or between the cloud. The second one is about how the color of the cloud, okay, so how deep, how dark it is. So this gives an indication of the strength of the trend. Okay, so how strong it is. Okay, so let's see an example here. Okay, so the color of the cloud indicates the strength. So let me just get the Ichimoku cloud out. So again, right, the cloud is formed between the area of A and B. Okay, so you see in this case, right, what happens is that the downtrend, right, will accelerate. So when the downtrend accelerates, when we see a big drop there, right, leading span A, right, which is the green cloud line, the green cloud line here, it falls below leading span B. So leading span B is the red one. Okay, so when you see that the downtrend accelerates, your A will fall much lower than B. So this situation, it produces a red cloud. Okay, so it's bearish. Okay, and then for when the uptrend strengthens, right? So when there's a change and prices move from a downtrend to an uptrend, the uptrend strengthens when the leading span A, which is again the green cloud line, it crosses above the leading span B, which is the red cloud line. Okay, so when this happens, right, what happens is that it produces a green cloud. Okay, so you can see over here. Okay, so when the uptrend strengthens, there's a crossover, and this situation in turn produces a green cloud. Okay, so because the cloud is shifted forward 26 days, it also provides a glimpse of the future support and resistance. Okay, so they don't identify a specific level, but rather this area that we have. Okay, another way we can interpret it, okay, is the thickness of the cloud. So generally when it's thicker, the stronger it is. Okay, so this is not covered here, but when the cloud is thicker, it's said to be stronger. Okay, whereas if the cloud is thinner, right, it's easier to break through. Okay, so let's try and find examples on that later on. Okay, so after our slides. Okay, the next one that we have is our Tenkan Sen as well as our Kijun Sen. Okay, so this is regarding the signals of the Tenkan Sen and Kijun Sen. Okay, so a bearish signal is generated here. Okay, so a bearish signal is generated when your Tenkan Sen crosses below the Kijun Sen. Like this. Okay, so when the Tenkan Sen crosses below the Kijun Sen, right, you have a bearish signal. And a bullish signal is generated when the Tenkan Sen crosses above the Kijun Sen. Okay, so for Tenkan Sen and Kijun Sen, we can also use them like support and resistance areas. Okay, it's similar to the idea of moving averages. Okay, where you have moving average crossover, so it explores similar concept where if the short-term moving average crosses above the long-term ones, right, it means that in the shorter term prices are the uptrend is stronger, right, as compared to the older ones. So in this case, right, the momentum is more bullish. Okay, so it explores a similar concept in that case. And also another way you can use them, like in moving averages, you can use them as dynamic support and resistance areas. Okay, so this is how we can interpret the Tenkan Sen and Kijun Sen. Okay, so like we covered just now, they can be used as support and resistance as well. Okay, and then we have our Chico span. Okay, so Chico span, right, is simply the close today. Okay, so it's the close today and it's plotted 26 periods back. Okay, so Chico span versus the close. So how do we interpret this, right? For Chico span, it's a little more counterintuitive, right? So usually, right, when prices hold above, for example, your moving average, right, things are considered to be bullish, okay? But for Chico span, it's the other way around. Okay, so for Chico span, right, when the Chico span is above prices, the trend is considered to be bullish. Okay, and when the Chico span is below prices, so for example, like that. So this is bullish, right? Because Chico span is holding above price. And when it's below price, the trend is considered to be bearish. Okay, so when your Chico span is holding below prices, trend is considered to be bearish. So how traders use this is that mostly they use the crossover with price as a buy or sell signal. Okay, so in this case, this is slightly different, right? You can see, for example, in this example where the Chico span, the yellow line, right? So yellow line is represented by the Chico span. So when the yellow line first cross over, so it crosses above crosses above prices. Okay, so when yellow line crosses above prices, trend is considered to be bullish. Okay, so you can see that afterwards there was a change in the trend, right, to move higher. Okay, so it's a little bit of lagging indicator in this case. Okay, so for those of you guys, right, so I saw if you miss the front part of this, right, so this is just a quick summary, right, of what we covered previously, and then also how we can actually interpret Ichimoku cloud and use them, right, in our daily trades. So Ichimoku cloud by itself, it is a trend following indicator, right, where they focus mainly on the clouds. Okay, so personally, I shared a bit just now as well that I use Ichimoku cloud more as a supporting case, right? So to support the call that I make, but I won't trade purely on Ichimoku cloud. And the idea behind this is because there can be a lot of noise, right, when you're trading just that. So that's the reason why I don't do it. Rather, I look for graphical levels, right, in terms of support and resistance levels, and use this, right, to support the case. Okay, so of course it depends on your personal preference. Okay, different people trade differently. Not to say that it's wrong or not profitable. Okay, there are people who trade with Ichimoku cloud and they're very profitable as well. Okay, so within the trend, right, when you look at the cloud, right, there are three things you can look at actually. Okay, so the first one is looking at the price, right, whether it's holding above the cloud or below the cloud. Because when price holds above or below the cloud, generally it defines the overall direction of the trend. Okay, so when price holds above the cloud, it means that is it bullish or is it bearish? When prices hold above the cloud, it's bullish, right? And when prices hold below the cloud, it's bearish. So just think of the cloud like a support and resistance area. Okay, so when prices hold above, it shows that your trend is bullish. And when it holds below, it shows that the trend is bearish. So that's the first way to look at. And the second way to look at it is to look at the thickness of the cloud, right? Which we did not cover in the slides, but generally when the clouds are thicker, it's considered to be stronger, right? In terms of the area of support and resistance levels. And if the clouds are considered thinner, right, it's easier to break through them, so it might not be that it's less strong. Yeah, okay. Yeah, so it's less strong. And the third thing to look at, right, it's the color of the cloud. Okay, so when the cloud is red, right, it means that your span A, it's below your span B. Okay, it means that the momentum generally is more bearish. Okay, so within the trend, your cloud color would change as well, right, as the trend ebbs and flow, and the uptrend would strengthen when the cloud turns green. right? And then for the downtrend, it strengthens when your cloud turns red. Okay, so those are the three ways that you can look at, right, for the Ichimoku cloud. Okay, so just the Kumo itself. Okay, the other thing that you can look at is actually the crossover of the Tenkan-sen and Kijun-sen. So Tenkan-sen and Kijun-sen, right, they generate signals for us, right? So you have a bullish signal and a bearish signal. So bullish signal just means that you want to buy, okay, you want to go long. Whereas for bearish signal, right, when you say that it generates a bearish signal, it means that I think prices are going to go lower, I want to sell. Okay, so you profit from the selling. Okay, so that's bearish signal. So bearish signal is generated, right? So how it's generated, right? It's when the Tenkan-sen crosses below the Kijun-sen. Okay, so that's for the bearish signal. And then for a bullish signal, it's generated when your Tenkan-sen crosses above the Kijun-sen. Okay, so the idea is similar to that of moving average crossover. Okay, so movements above or below the Chikou span, right? So the last one that we have is the Chikou span. So this is plotted 26 days back. This can be used to generate signals as well. Okay, so when the Chikou span is below prices, it means that the trend is considered bearish. Okay, and when the Chikou span is above prices, the trend is considered to be bullish. Okay, so those are the all 5 plots that we have for the Ichimoku cloud. Okay, they can be used as support and resistance areas. Personally, I rely more on the cloud itself. Okay, not so much on the Kijun-sen as well as the Chikou span. Okay, so do you guys have any questions so far? Okay, so now that we have come to the end of our PowerPoint, right, I'm just going to load our charts and we'll try to apply this onto the charts. Okay, so whatever we've learned with the Ichimoku cloud onto the charts as well. Okay, so if you guys are on your computer, right, you have TradingView with you, just pull it out. Okay, let's analyze them together. So let me just log into my TradingView. Okay, so let's see what we have. Okay, I'm just gonna load any chart that I can find. Okay, so let's see what we have. So for example, let's load CAD Yen. Okay, so let's load CAD Yen here and see what we have here. Oh, okay. Yes. Before I continue, okay, just sorry, let me just remove this. Okay. Okay, so yesterday, right? Okay. Okay, so let's just see CAD Yen. So yesterday we made calls on CAD Yen, I think on Go as well. Okay, so I hope you guys took this. It's very nice. It bounced off very nicely. Okay, so that's for our exclusive webinar series where we go through technical and fundamental setup. Okay, we will be covering that again tomorrow. So how it's scheduled is that on Tuesdays and Thursdays, right? So today's Tuesday, and then on Thursdays as well, we are covering specific webinar topics. So for example, today we have Ichimoku Cloud, and then for Monday, Wednesdays, and Fridays, we have fundamentals and technicals, a mix of both. Okay, where you can come in and just ask us any questions that you have, right? Regarding fundamentals or even technicals in terms of the analysis of the charts. Okay, we'll also present nice trade setups that we have, but in December it's slightly harder, okay, because it's less liquid. Everyone is away on a holiday. Okay, so let's see how we can interpret Ichimoku Cloud in this case. Okay, so let me just remove all of this. Okay, so what we really care about is only our Ichimoku Cloud. So I'm just gonna load Ichimoku. Okay, and then after we do this, I'm just going to share a little bit more on how I would analyze it, right? And how I would use Ichimoku as a supporting argument, right? Which I shared earlier just now. Okay, so over here, right? So just now, right, we have 5 components that we covered. Let me just change the color so that it's easier for us to see. So we have the this one, okay, so this is what we call the Tenkan-sen. So it follows prices closely. Okay, so this is the Tenkan-sen, right? So the blue line that we have is the Tenkan-sen because it's the one that follows prices most closely. Okay, you can see here, let me just remove the rest and it's probably clearer. So this one, it's the default period is 9, you can see here. Okay, and then the baseline would be our Kijun-sen. Okay, so Kijun-sen, it's here. So Kijun-sen is the second one, so it's the one that follows further away. It's further away, and then we have our lagging span. Okay, so this is what we call the Chiku span. Okay, so this is the fifth one that we covered, right? So when prices are when it holds below prices, the trend is bearish. When it holds above, the trend is bullish. Okay, you can see here it's pretty clear, right? When it holds above, the trend is bullish. Okay, look at the green line. When it holds below, trend is bearish. So this is the fifth, the last component that we covered, which was the one that I told you guys. It was slightly more counterintuitive. Okay, so yeah, so this is the Chiku span, which is the lagging span. Okay, we also have the lead 1 and lead 2. So lead 1 is your span A, and lead 2 is your span B. Okay, so you see when you see the span A and B, right? So this is the span A and B. Let me just draw it out so that it's clearer. Okay, so this is the span A and B. You can see over here the green and red lines, this one. So when you have your span A and B, it forms your cloud. Okay, so you can see how it's colored here. So the cloud is formed here. Okay. Okay, so yeah, so this is on span A and B. Okay. Okay, I have a question by Richard. He's saying Cat Yen is now at a good level to short text. Okay, based on your analysis with Ichimoku Cloud. Okay, on Ichimoku Cloud, prices are still holding above Ichimoku Cloud now, Richard. Okay, here. Okay, so I'll be slightly more cautious. Okay, even though, right, there is a very strong resistance level here. But for me, Cat Yen overall direction is still bullish. I will show you guys why. Okay. Okay, so on the, you can see, right, even if I'm just using Ichimoku Cloud, it's holding on the weekly time frame, it's holding above the cloud as well here. So I'm on the weekly, so this is what we have, right? You just focus on the recent price. It's holding above the cloud, and also more importantly, over here, you see on the daily, it's holding above the cloud as well. Okay, so I'm bullish on Cat Yen because if I were to hide this Ichimoku Cloud, so just now I shared that I don't just use purely Ichimoku Cloud. I rely more on graphical levels as well as retracements and extensions. Okay, so over here you can see on Cat Yen, right? This is the graphical level that is sitting on the daily. This level here. Okay, so this level, and I'll show you guys why. Because if we do a retracement from this low to high, you can see that it's sitting directly on the 61.8 retracement here. The prices bounced off. Okay, so that's the reason why I think larger time frame is still bullish. But I do agree with you that on the smaller time frame, right, there is a strong level that we see, and I'll show you guys in a while. Okay, 61.8 retracement is here, and another retracement from this low to high. We see the 78.6 is there as well. Okay, it lines up there. I'll just remove this line, and you can probably see, you can see two different colors over here. Okay, and it was the previous strong support and resistance level. This was a fake out. Okay, and you have trend line. Okay, not the best trend line, I would say. Okay, but just to be careful. And the last thing to check is your extension level. So Fibonacci extension, right? For those of you guys who attend the exclusive webinar, you know that we do this often. So Fibonacci extension on this move, right? You can see that it lines up with the 78.6 as well. So on Cat Yen, okay, so this is my view on Cat Yen. For now, I think it's still bullish, so it might be a little bit tough to call that bounce, okay? And then you can see over here as well, this trend line. Okay, so just now you mentioned that it's at a good level to short. There is a resistance level that I've identified, so I'll just show you in a while. Okay, so you can see here, right? Low to high. You can see that prices went to tap the 61.8 retracement. Okay, so yesterday we caught the bounce on Cat Yen. I think it's here. Okay, if I'm not wrong, I think it's this one. Okay, I gotta go and check the call yesterday again. But yeah, we made a call on Cat Yen, a bullish call. Okay, so it bounced up nicely. So you can see the 61.8 retracement here and a previous graphical level. So we know that the target is negative 27. Okay, so let me just open up the negative 27. Okay, so negative 27 is slightly higher here. So for me, my view direction overall is still bullish, but this was the resistance level that I found today morning, which we should be careful of. Okay, so this level here, you can see is in line with the swing high. Okay, I'll just put a dotted line because my overall direction is still bullish. Okay, so if prices break above, then yes, it could push higher. And mainly because negative 27 is higher as well. Oops. Let me just get this line. Okay, so I'm just going to put a dotted line because it's just a level to be aware of. And an extension level, you can see that it lines up very nicely. This zigzag here. Sorry, just bear with me for a while. I can't get the magnet mode out. Okay, this zigzag. You can see this extension. So same thing, I'll just take just 3 points. Okay. 1, 2, 3. You can see the 61 extension ends up here as well. Okay, so this level. So if I have to identify a resistance level, it will be this level here. I'm not too sure if you guys can see it clearly, but this level, you have a graphical swing high, you have a 61 extension and 38 retracement. Okay, but for me personally on Cat Yen, I am not looking to short. Okay, even though Richard, you did highlight that, yeah, this is a level I will watch. Okay, but personally my direction is bullish, which is why if anything I want to wait for a break above this level because negative 27 is slightly high. Okay, so yeah, so this is currently at the moment, right, there's no level for me personally to take any positions right now. Okay, so I'm just gonna wait. Okay, yeah, so but anyway, this is on Cat Yen. Okay, so if you look Ichimoku cloud, you can see as well. Okay, so on Ichimoku cloud, this level, okay, just to be careful. Depending on the time frame, on the 4 hours, you can see that prices are still it's within the cloud right now. Okay, so yeah, so that's why I wouldn't do anything. Okay, for your Chico span, right? So Chico span, it's above. So Chico span is this green line. You can see here. This is the lagging indicator. It's this green line here. So price is holding above prices as well, which means that the direction, right, it's bullish for them. Okay, so yeah, so this would be a level to watch, to be careful of, but just based on the retracements and what we did earlier, right? For me, Cat Yen is still sitting on the larger time frame support and it's holding above the trend line as well, right? If anything, we could see a pullback to test the trend line, but for me personally, I wouldn't go for a short here, even though I do recognize that this is a key resistance level, okay, over here. Okay, so yeah, just to be careful of it. And the main reason why is because negative 27 is slightly higher, right? Which means that the target is slightly higher. That's the reason why I wouldn't. Okay, but trust your own system, trust your own analysis. Okay, because if you give a chart, right, to anyone, two different analysts can come out with different analysis. Okay, so yeah, so that's how you can combine Ichimoku cloud, okay, and to basically confirm your bias. Personally, for me, I use a lot of the Kumo, right? So, for example, if we present this analysis, right, on Ichimoku cloud, usually what I do is that I'll just use the Kumo, right? So depending on the call, if you are short, right, it helps. If not, then you can look at other indicators as well. Okay, okay, but I'll sidetrack a little there. Okay, so let's go back to our Ichimoku cloud. Okay, you're very welcome, Richard. Okay, okay, so let's look at other pairs. Okay, so let's say or even on let's say on euro dollar. Okay, so on euro dollar, right? Yesterday we caught the bounce nicely as well. I hope you guys took the trade. Okay, our direction on euro dollar was bullish, right? And I showed you guys why. Okay, so same thing, right? Even if you look at it just purely from Ichimoku cloud perspective, right? On the daily time frame, it's holding above the Ichimoku cloud, right? You're over here. This cloud, this Kumo, okay? The Kumo, it's bullish, it's showing you bullish pressure. Your Chico span, right, which is the leading lagging indicator, it's also holding above cloud, which supports the bullish bias. We also have the Tenkan Sen holding above the Kijun Sen. So even if you look at just Ichimoku cloud on the daily, right, on euro dollar, it's bullish. And yesterday we made a call on the bullish, right, and I showed you guys why. So yesterday when we did our exclusive webinar, right, I showed you guys this here. Okay, I showed you this, right, like still holding above, oops, sorry, wrong, yeah, this one. Okay, so it's still holding above the trend line that we have over here, or you can see here as well, right, depending on how you draw it. Okay, so still holding above the trend line as you can see, and also we did a retracement of the move yesterday, right, from low to high. And I shared that it bounced off the 61.8 here. Okay, it was graphical level as well, strong support level previously. So it bounced off the 61.8. The target on the larger time frame is negative 27. Okay, so personally for me, okay, it depends on your trading preference. I use a lot of Fibonacci retracement. Okay, for those of you guys who attend the exclusive webinar series, right, you would know that I think my main one would be using retracements and using the targets, negative 27 and negative 68 as the targets. Okay, so personally, I rely on that quite a lot. I find it very helpful in terms of determining the direction and trend line. Okay, so trend line, 61, 78. If it bounces off this level, you know that the target will be negative 27 on the bigger time frame. Okay, and also the other thing I always use is the break of the counter trend line. So when the counter trend line is broken, right, it could push higher. So you can see, for example, in this example, right, when the counter trend line is broken, prices actually need a pullback to test it again, right? So it bounces off the big 61.8. It also breaks the smaller time frames trend line and makes a pullback, right? That's when it could push higher. So my bias on euro dollar is still the same, okay? And if you were to change the Ichimoku cloud, you can see as well, right? On the daily, on the 4 hours, it's still bullish. Okay, so that's how I use Ichimoku cloud to support the analysis, okay? But I wouldn't trade just based on Ichimoku cloud. But that's my own preference, okay? It might work, it might not. I've not tested it enough to know. Okay, so for example, one more thing to note is that because Ichimoku cloud is a trend following indicator, right? It only works well when the market is trending. So as much as possible, if you're gonna trade based on Ichimoku cloud, right, using the indicators, you wanna trade when the market is trending. Okay, don't use Ichimoku cloud on a ranging market because it gets very choppy. It also gives you a lot of false signals. Okay, so that's the reason why it's important to note that Ichimoku cloud has to be used in a trending market. Okay, so let me just find an example of how we should not use it. Okay, so for example, let's see this. Okay, let me just remove everything. Oops. Okay, so let's see this example over here. Right, you see this portion. Okay, so or maybe let's go down. Let me just see. Okay, for example, okay, so let's see this portion of the chart. Can you just zoom in? Okay, I'm just gonna box it up so we focus on this part. So let's see this portion of the chart, right? So blue, it's pretty neutral. So you can see that prices are holding within this support and resistance area, right? So there's resistance previously before prices broke that level and this support. So it's pretty much holding within this range, right? The ones in the blue box. So look at what we have in the blue box. Yeah. Okay, so it's pretty much holding within the range. So you can see in this example, right? It's not, Ichimoku cloud might not be the best indicator. Okay, so we want to look at something that is more range bound, for example, like stochastics or even RSI, right? So indicators that helps when the market is ranging. So basically indicators that identify overbought and oversold regions. Okay, so in this case, right, on Ichimoku cloud, you can see that prices are holding below the cloud. Okay, so in this case, at this area, when it holds below the cloud, our trend direction is bearish, right? But your Chico span, it's holding above, okay? So this is bullish, okay? So then we can see that these two components don't line up. Okay, your Tenkan Sen and Kijun Sen shows the same as the cloud, right? Where it's bearish as well. So in this case, you can see that there are many conflicting signals in terms of the 5 components of the cloud. So that's why it's not best, right? It's not the best to use it in a ranging market. Better in a ranging market, you want to explore things like, for example, oscillators, for example, like RSI. Okay, so that's another one that you can use instead. Or even stochastics. Okay, so RSI helps us to identify overbought and oversold region. So you can see it in this area. Okay, so this is probably best. On RSI, we have a few ways we can use them. The first way we can use is by identifying hidden levels. Okay, so support and resistance levels where prices tested multiple times and bounce off this area. You can see in this case, right, correspondingly, right, whenever prices test the support area that we have, right, it's in line with the support that prices are sitting on. Okay, so this is one way we can use RSI. So by identifying these hidden levels, which has been tested a few times, right, and it actually works for prices. That's one way. The second way on RSI is to identify the overbought and oversold regions. Okay, so in this case, right, this boundary or this range, right, depends on what you have. So the upper band, right, usually people set it to 70-30. Or if you want it to be more sensitive, it can be 80-20 as well. If it gives you false signals, okay, so if it generates a lot of false signals, you want to widen your band so that this indicator is less sensitive. Okay, so it doesn't just keep crossing and whipsawing above the 70 and 30 area. So how you interpret this, right, for the lower band is that if prices enter the lower band, okay, so ideally you see something like this. When it enters the lower band, let me just bring this up so that's clearer. So when, for example, it enters the lower band and it stays within this, we want to look for the exit. So on the exit, the immediate exit of it, it means that it has exited from the oversold region. Okay, this also means that there's enough buying pressure. So prices there could be a change in trend, right, to push upwards. Okay, so when RSI exit the oversold region, right, which is the lower band, right, it means that prices could be pushing higher. Okay, so for example, of course, you don't trade this purely on RSI. Look at RSI and also combination of other levels. For example, if it's sitting on a strong support level and your RSI showed that it exited the oversold region, right, this could be a good sign that a reversal is coming. Okay, so for example, here as well, you can see, so prices hover about in this is the overbought region, right? It means that the buying pressure, right, prices are overbought, right, which means that it's slightly higher than it's supposed to be. So there's a chance that it could reverse. But what is important in RSI is not the overbought and oversold region, rather when it makes its first exit. So you can see here, this is the exit. When it exited from the oversold region, right? Sorry, overbought, this is overbought. So when it exited from the overbought region, it means that investors could be closing the position. The buying pressure is weakening. Okay, they're selling closing position, which is why it pushes lower. Okay, so of course you want to combine it with other indicators, so don't trade purely just on that. Okay, so yeah, so these are a few ways you can use them. So that's the two ways. And then the last way you can use your RSI, it's actually two other ways, right? The first way, right, which is what we use often in EFG, is by drawing the ascending trend line on the RSI if it's sitting on support or resistance levels. So in this case, we look at breakouts. So for example, right, if prices are holding support very nicely, but over here it broke out, okay? So this is what we call RSI breakout, which means that there is a bearish momentum because it broke out of the ascending trend line. So you can see here as well, right? There's a strong push down, okay, over here. Okay, so of course it will be more ideal if Ichimoku cloud lines up, but again, Ichimoku cloud is more for a trending market. So that's just one way. And then for the last way we use it is by identifying divergence. So for those of you guys who are not familiar with divergence, right, essentially when we have two types of divergence. The first one is the bearish divergence. Okay, so for bearish divergence, it just means, right, that prices are forming a higher high. Okay, so in this case, for example, let's see. Let me see if I can actually find a divergence as an example. Let's see. Okay, I probably got to go on to the larger time frame to find it. Okay, so let me try and find an example of a divergence just to show you guys. Okay, for example, this would be a good example. Okay, here. Okay, so look at this example. Okay, so let me just remove this. Okay, so for example, okay, so let me just remove the Ichimoku just so that we are not confused. So for divergence, step two, the first way is to look at prices, right? So when there is basically a mismatch between prices and RSI. Okay, so you can see here, right? Prices actually push to form a higher high. over here, right? You can see this, the next high is actually higher than the previous high. But look at the RSI, right? So for the RSI, what happens is that it actually forms a lower high. So what this means, right, is that the bullish momentum, it's waning. Okay. So it means that, right, it's slowing down. So the bullish momentum might not be sustainable. So following this bearish divergence, right, we saw this reversal, which you can see here. So I'm just going to highlight this. You can see this reversal here. Okay, where prices made a pullback. Okay, in purple. Okay, so you can see this divergence and then following the divergence. So this is what we call a bearish divergence, where prices push higher, but your momentum, your oscillators are showing that it's pushing lower. Okay, so this is the first one. This is a bearish divergence. Okay, we have a bullish divergence as well. So for bullish divergence, let me try and find this, whether we actually have one. Okay, so bullish divergence is the other way around. Okay, so for example, you can see here. Okay, so let's focus on this portion. Okay, so for bullish divergence, it's the other way around, right? So how bullish divergence work is that prices actually form a lower low. You can see this low, right? It pushes lower and lower, whereas for your bullish momentum, it forms a higher low. Okay, so actually to be more precise, this would probably be the best. You can see here this move here, right? It pushes lower and lower, so that this high, this high, it's actually lower than the previous high. You can see here. And then you look at this portion where this high, right, it's higher than the previous high. So it means that there could be a change, right? The downward pressure or the downtrend, it's weakening. Okay. So following this divergence, you can see that when prices would push higher here. So this is what we call a bullish divergence. Okay. So yeah, so this is another way you can combine the indicators. Okay, sidetrack a little because I was covering on oscillators. But yeah, this is another way you can combine them. Okay, so especially if you see a key graphical level, you can see this level here as well. It was the previous swing low. You can see there was a strong push, right? It was a level that's been tested multiple times actually. Two times or 3 times. When I go back, okay, so it's a strong level. Been tested 1, 2, you can see here. 1, 2, 3, 4. And then when we look to this level, right, it actually bounces off again, and you have a very nice divergence that we saw. Okay, so yeah, so this is another way you can combine them, right? So different indicators. Okay, sidetrack a little. Okay, let's go back to our Ichimoku club. So let me just load another one. Okay, so this was just basically to show us that on trending markets, right, we can use Ichimoku cloud. It might not work so much on the ranging market, right? And I also covered on RSI. So RSI usually is used more for oscillators, so within a range. It helps in terms of divergence as well. So if you identify this, right, especially at a key level with divergence, right, it could give us a pretty good probability. Okay, so the last chart, let's look at, for example, Aussie dollar. Aussie dollar is pretty much in an uptrend as well because dollar is weakening. So I think most of the dollar pairs that we see, it's doing pretty well. Okay, so same thing. Okay, so in this case, you can see the Aussie dollar still holding in an uptrend. So let's load our Ichimoku. Okay, so for Ichimoku, you can see here, right, your Chico span. Let me just zoom in. Okay, so Chico span, it's above cloud. So when it's above the cloud, it means that it's bullish. You have this Kumo, right? Your Kumo is also green. The Tenkan Sen holds above the Kijun Sen as well. So just now we covered that we can also use this Tenkan Sen and Kijun Sen as dynamic support and resistance levels. So you can see this example, okay, Aussie dollar actually pull back here, right, to tap this Kijun Sen, okay, before bouncing higher. Okay, so there are a few ways we can interpret this, and then the last one is to look at the crossover. Okay, so in this case, not much crossover because your lead span A, right? In this case, your span A, oops, here, right? Your green cloud, your span A is above the span B, so it's green. Okay, so it's in line with the bullish momentum. So in this case, you can see that all of these elements line up for Aussie dollar. Okay, in terms of the Ichimoku cloud. Okay, so based on, if you don't want to analyze it based on Ichimoku cloud, right? You want to analyze it just based on the larger time frame. You can see as well, this is also holding above the trend line. Okay, of course, we're not going to go into identifying the setups today, but just to show you that you can see that it's been tested multiple times, right, in terms of the trending market. 1 time, 2 times, 3 times, 4 times, 5 times, 6 times. Okay, so if anything, it could pull back to test this level. Okay, so yeah, so this is just something to watch in terms of how you can combine the indicators as well as trend line and Ichimoku Cloud. Okay, so do you guys have any questions so far? Or any charts you want us to look at, please just put it under the questions tab. No questions? Thank you, Richard. Okay. Okay, so if no questions, I think that's pretty much all we have for today, okay, in terms of how we can combine the indicators as well as how we can use this, okay. So personally, just to share a bit, I mentioned that I do use Ichimoku Cloud, but again, as a supporting argument, not so much trading solely on it, okay. So if you know, I rely more on retracements as well as trend line, okay. So, but that's my personal preference. It works as well, okay. So, not to say that it's wrong. Okay, so that's about all the time that we have for today. Thanks for joining us. Okay, so tomorrow we'll be having our exclusive webinar series. So we'll be doing the fundamentals for that. So key news for the day, any breaking news, economic calendar, as well as the technical analysis portion, where we'll be showing you guys nice trade setups. So tomorrow's section will be covered by me as well as Joyce. Okay, so we'll catch you guys tomorrow. Thanks for staying with us all the way to the end. Okay, see you guys tomorrow and happy holidays. Okay, you're very welcome, William. Okay, bye, Richard. See you tomorrow. Okay, bye, guys.